watching Business Today TV. I'm Sakshi Batra, and on this special edition, we're going to be focusing on the largest listed stock on the Indian stock exchanges by market value, and that is Reliance Industries. Why am I talking about this? Is because Reliance Industries shares have gained almost 2.5% in trade today, and this is just after the company reported its Q2 numbers on Friday after the market hours. So the reaction is as opposed to the earnings as well as some of the brokerage houses reports that have come out quite bullish after the earnings were posted as well. Remember that the Mukesh Ambani-led conglomerate has reported an increase of nearly 9% in the profitability as well as a 12% increase on the revenue front on a sequential basis for the July to September quarter. Following these second quarterly results, several brokerages have maintained an optimistic outlook on Reliance Industries. Notably, Reliance Industries oil and gas segment exhibited a staggering 72% surge in its revenue, reaching 6,620 crore rupees. Remember, the Reliance retail stock or the Reliance retail portion has also delivered a strong performance this time with a quarter-on-quarter revenue growth of 10.3% amounting to 77,163 crore rupees, and this has surpassed most of the estimates as well. Also, when we talk about Reliance Industries telecom division, the Jio numbers, that has reported a 3% sequential growth in the consolidated revenue amounting to 24,750 crore rupees, aligning with the poll projections that were estimated on the streets. Now, what about the brokerage houses? Let's talk about Jefferies first, which is a brokerage house that is headquartered in New York. Jefferies has assigned a buy rating to Reliance Industries shares after the earnings. They've also set a price target of 3,000 rupees on the stock. Remember, currently the stock is hovering around 2,321 rupees. That's a surge of 2.4%. But on this, a 3,000 rupees price tag really implies a potential 32.4% increase in the stock price. So even if you were to invest in Reliance Industries today, Jefferies believes that it can give you an upside potential of over 32% in the long run. Now, why has Jefferies pointed this out and has given this increased rating as well as the target price, which is upwards of 3,000 rupees? Well, the brokerage house has highlighted that there have been notable increase in the profitability in the oil to chemicals business segment. That's driven by refining and a healthy subscriber addition that has been observed in the Jio division, the Infocom or the telecom business of the company as well. However, it has also noticed that the average revenue per user or the ARPU has missed slight estimates due to the unfavorable mix as well. This time around, the ARPU was somewhere around 181 rupees, although there has been a consistent increase in the ARPU numbers of Reliance Industries that have gone up in the last 5 months or in the last over a period of time from 177 to 181 rupees or therefore as well. Now, Jefferies has pointed out that Q2 earnings before interest, taxes, depreciation and amortization, which is the EBITDA numbers, has also shown an improvement of 8% sequentially, which has slightly exceeded the estimates for most of the street estimates as well, with the retail throughput per square foot also rising by 10% on a quarter-on-quarter, which is enhancing the operational performance. And despite the depressed petchem spreads, the brokerage house has also adjusted its segment EBITDA expectations to 4 and 5% for FY24 and for FY25 respectively. Now, Jefferies also anticipates a 13% EBITDA growth in the current fiscal year, making it a favorable risk or reward proposition as well. Now, apart from Jefferies, we've also noted that Nomura has also given a buy rating on Reliance Industries. Its recommendation for Reliance Industries target price is at 29.25, just below the 3,000 mark that Jefferies has also pointed out, but similar to about 28-29% surge from the current levels as well, indicating that potential upside of 30% from the current levels or so. Now, remember Nomura, which is a London-based brokerage house, this has highlighted healthy growth for Reliance Industries across all the segments in Q2, noting the strong refining margins in the oil to chemicals business that partly offset by a decline in the petchem. while the exploration and the production or the E&P volumes have also seen an increase with the commencement of the MG field as well. Nomura has pointed out that although the company's net debt has moderated, the free cash flow remains negative. On the other hand, HSBC recommends holding Reliance Industries shares with a target price of 2460 rupees, which is the lower of the three that we have seen so far, because this company expects or implies the expected increase of 8.5%. Now, the brokerage houses has expressed reservations about the outlook for the O2C segment, which is the oil to chemical segment, emphasizing that the retail sector's store growth has lagged, and has also highlighted that the capital intensive nature of the digital businesses would be something that would cap the upside for Reliance Industries at this point in time. So you do have two positive reports and one neutral report on Reliance Industries, with a price target nevertheless for all three of them higher than the current price as well. So ranging between 2460 rupees to all the way to 3000 rupees. That is why Reliance Industries shares are also showing the kind of bounce in today's trading action, reacting to the numbers as well as the positive outlook for most of the brokerage houses as well. So this is why Reliance Industries shares are in focus. We will continue to share with you which are the other stocks that are making headlines in the stock markets on a day-to-day basis. So do stay tuned with us on Business Today Television.
Well, at the India Mobile Congress, really interesting propositions when it comes to new products.